Good evening. This is Jack from Charting the Markets, and this is the Bigger Picture webinar for the evening of Wednesday, the 19th of February. My disclaimer, I do this for educational purposes only. I'm here to share my technical analysis with you. I hope you can take some of what I'm doing, learn from it, transfer it to your own charts. I'm not here to issue trading signals. Right, I hope you saw my post today. I've got the, I was looking at the topping setups on the indices today, and I have no idea whether these are going to play out, but I've got to say, they're nice. They are really, really, really nice. That doesn't mean they're going to play out, and I have to say the very high quality doesn't actually improve their odds of playing out, but they are, I have to say, very nice. We are seeing a lot of disruption this year. That disruption is not decreasing by the day, and markets don't tend to like disruption. That doesn't mean they're going to dislike it strongly this time, but I got to say, it's a nice looking setup, and we may well see the weakness that I'm expecting we will see. Having said that, one thing I would say is that I was expecting to see this retracement on crypto as well, and crypto and equities do tend to go together. We are seeing this retracement already on crypto. Now I think that's probably going to go a bit further, but I got to say the case for seeing a strong equities retracement here is at least somewhat weakened by the fact that we're already seeing it on crypto, and it's not yet happened on equities. So I think it's going to be very interesting to see over the next week or two whether it does. All right, let's have a look at ES. Now ES, we've got a very nice looking potential level top here. What I would say is overall we are very thin on sell signals here. We've actually got a couple of weak sell signals which have made it possible near miss targets on ES and NQ, but I'm not really taking much notice of those. I am watching the very nice looking topping setups, and you can see it's actually just as nice on ES here. That is interesting. But in terms of the short-term pattern setups, I haven't really got a lot. And in terms of short-term negative divergence, I haven't got a lot of that either. So watching with great interest to see what happens here. And I think the markets are compressing. Under the circumstances, I'm having a little trouble visualizing a strong wave up. It's easier to visualize a wave down at this stage, but I'm keeping an open mind. All right, I'm working from the data and I'm sharing what I see. What I see is ambiguous here. It's a beautiful topping setup, but I've seen plenty of beautiful topping setups that haven't played out, and this one may not play out either. All right, okay, so we've got a weak sell signal on ES and a very nice looking double top. And we've got okay looking double top setup here, but it could be a bull flag forming on NQ. We've got a weak 60-minute sell signal there, and that also has reached the possible near miss target. RTY is just about holding on to the weekly pivot and the monthly pivot. I was noting on the post today that we've got IWM has been trading under the daily middle band, and I'll come to that on the RTH charts. On YM, just about holding on to the weekly pivot, but again, this has been playing around with the daily middle band and holding support there. So this move up that we're seeing here is tech. We've seen not just tech, but I mean SPX has been leading, NDX has been not far behind, and RTY and Dow are both down in the dumps. DAX, we saw some weakness today. We've seen a bit of a sharp retracement. This, I have to say, this has been wild. A wild ride over the last few weeks. We didn't have a sell signal here. We actually had 3 failed sell signals, but this was not a sell signal that made target here. We did have a sell signal still on ESTX, and that has made target. We don't have any current positive divergence. We're testing the weekly pivot here, and we're pretty close to a test of that on DAX, and we're holding it just about on RTY, and we're holding it on YM. That's kind of a feature here. We're above it on both ES and NQ, and that's because really all the action's been happening on ES and NQ. But do we have a lot of sell signals here? Do we have a short-term pattern setup which is strongly favoring reversal? We do not. Doesn't mean that won't develop, but in the process of developing, we would probably go higher. So let's have a look at this on the bigger picture. All right, SPX. On the daily chart, we never tested this rising support trend line here. This is the rising support trend line from the October 2023 low. And I have to say that kind of weakens this trend line here as a target. We're testing the daily middle band at the moment. We got slightly over it, but not unduly over it. We've gone nowhere near threatening the 3SD upper band, but it wouldn't take an awful lot to get there. If we got up to 6180 or so, we'd be touching it. So it isn't actually that far above. We have been seeing compression here. It's not so obvious here on SPX, but I'll come to it on the others. In terms of the 60-minute chart here, we went a little higher today, 61.47. Basically, we had a flag here. It went up. I've drawn this in as a support trend line here. That wasn't actually part of the flag pattern. And it could be that we're going to develop a trend line and find a high which sets up a pattern here, but we would need to go significantly higher to get there in all probability. And obviously that is a possibility. On the 15-minute chart, not an awful lot to say. Do we have a decent short-term pattern here? We do not. All right, on the Qs, we've gone a little higher here. Again, we're slightly above the daily upper band, but not so much that we're directly threatening the 3SD upper band at the moment. On the hourly chart, we've got a possible weak RSI 14 sell signal brewing, but it's not an awful lot to hang your hat on. In terms of do we have a decent reversal set up here? No, we don't. I could draw in a couple of trend lines here that could give us a nice pattern on NDX, but the key point is we haven't reached them yet. This one here, but we've gone through it. There is this one here, is a possibility, but we would need to go higher to get to it. Not an awful lot higher, but a bit. We will see. One thing to mention is that I was mentioning on my, I didn't mention it on the post today, but I was mentioning it in the pre-market video this morning. In terms of the next few days, I was mentioning in my post last week, and I mentioned that we had a string of bullish days and a bullish window in which to do the retest for highs, and the two decent bull flags, the ones I showed, were on SPX and Qs, and they both made those targets. I did then mention that we were bearish into the end of the month. The more bearish leaning days are tomorrow and Friday. We don't have actually any bullish leaning days for the rest of this month. Nothing significant anyway. We've got a bearish day, pretty seriously bearish day on Monday. End of February, miserable in recent years, it's a note. And we've got a very bearish looking day on the last trading day of February, which is on Friday the 28th. We will see. But certainly, if we are going to see some downward action here, this would be a pretty good time to see it. So end of February has been miserable in recent years. I'm watching with interest to see what happens there. But I am noting that I haven't got an awful lot of negative, short-term negative divergence. We've got an RSI 14 sell signal fixed on 15-minute. We've got potential little level top, maybe. But it's not... what I would love to see is 6 sell signals fixed on the hourly futures, and we are nowhere near it. Not even on the same continent. Okay, on Dow, I'm still wondering whether this might be a bull flag triangle. Maybe. We closed slightly above the daily middle band today. We've been basically skirting around it at the closes for a few days. You can see the compression here. This has really been compressing. Generally speaking, this kind of compression will precede a trending move of some kind. I'm thinking it's going to be easier to go down than up. But that doesn't mean we aren't going to go up, and we could. We still do have a weak RSI 5 sell signal fixed here on Dia. On the hourly chart, nothing. If this is a bullish triangle, it's just not at the same kind of stage as the others. This would be the A wave, B wave, C wave. This could be D and back. If it's a classical triangle, though, we need to hit this trend line and then do a wave down. But not every triangle is a classical triangle, and this could already be a bull flag. It's just not a very nice one. If that's the case, then we may go and retest the high here. In that case, that would give us a very nice looking nested double top on Dia, but the setups, the topping setups on SPX and Qs would likely deteriorate depending on what they did then. In terms of those topping setups, SPX, we've got, hang on the hourly chart, this is a potential double top, and this is a potential smaller double top. On Qs, this is a potential large double top, and it's pretty serious. I've marked it in on the charts I showed today, so have a look at the post if you want to see them. Dia, beautiful potential double top, improves a bit if we retest the highs, but doesn't need to. Looking at IWM, and here we've got a little double top that hasn't finished playing out yet, but this could well be a head and shoulders right shoulder here. This would be the this would be the left shoulder. This would be the head. This would be the right shoulder. maybe. It wouldn't be a bad one. It's not great either, but again, this could give us a pretty good. This is the least strong of the various reversal patterns, but the three double tops on SPX, on Qs, and on Dia are really nice. This is decent. This could deliver, and I'm wondering whether it might. If it does deliver, then we could see a lot of downside here, and we could see a substantial retracement that would get us back to within striking distance of the August lows, which on SPX was actually a thousand handles lower than we are now. All right, on IWM, hourly chart, nothing really to see. This could be a flag breaking down, but it's not a very clear setup. This could be a little. We do have a little potential level top here. It's a bit oversized. There's nothing really impressive about this. This could, of course, reverse back down here, do a lower low, and actually just be a larger bull flag forming. I'm keeping an open mind. On DAX, we've seen a bit of a retracement here. We've been seeing this long upper band ride, and we've seen some real move up here on DAX. We haven't reached the obvious trendline target, but it doesn't really need to reach that ideal trendline target. There are other potential options here. Nothing particularly great looking, but I have to say we did have a great pattern on DAX when I had been running it from here in 2009, and it was lovely, absolutely lovely. What did we do here? We broke up from it, and this does not look anything like a bearish overthrow. This is way beyond that. So basically what we've done here is we've just started a new pattern from this pattern, and it's not entirely clear what the format of that is. That will likely go higher, and we would then see how that developed as it went higher. Looking at Nikkei, still kicking around the daily middle band. This has been exceptionally boring. I'm not really taking seriously the idea that we could reach this, retest this high here at 42.4, although it would give us a really huge double top if we did that. Not the kind too large really for me to take it seriously to play out, but I was wondering whether we would do a retest. At the moment, there's absolutely no sign of that happening. All right, great. Let's go on to the dollar. And the dollar is looking pretty nice here. Why is it looking nice? Because we've got this beautiful trend line here, and this is now a very nice looking bull flag falling megaphone. Now, the obvious next target within the flag would be this flag resistance, which I've got up here in about the 109.55 area, and then that would be setting up a retest of this high. That could well be the second high of a double top when we get there, but I've got more to say about this on the daily chart. Looking at ZB, we had an IHS break up here, and it failed. Obvious next move would be a retest of the monthly pivot, which is basically heading back to the source. Doesn't always make it to that target, but it usually does. So until we see some strong evidence to the contrary, I'm assuming that's going to be the case. Could it go back and retest this high, set up a double top, and then come down? Yes, it could. So we'll see how that goes. All right, let's have a look at the DX chart on the bigger picture. And on DX, we've got an old RSI 14 sell signal fixed, not taking it particularly seriously, but this is the flag, and it is a peachy flag. It doesn't look quite as nice. Well, I'm looking at a bigger picture on the USD daily chart here, so it could be that it would look as nice on here. I haven't actually looked. I suspect it would. But I haven't drawn it in. I might have a look at that tomorrow. But in the meantime, where we are here is we could be topping out within this megaphone, which I drew in when we reached about here as the obvious trendline target. We could then top out within that, and then do a full reversal back to support, and then break down into, because this would be, it's oversized for a bear flag, but if we did see a break below this rising support currently in the 100 area, I'd be looking for at least a retest of 99.22. Or alternatively, we could get up to this retest and then make a power higher into a retest of this 114.75. Why would that be significant? Because that would be a potential second high of a large double top, which then on a sustained break below 99.22 would be looking for a target approximately in the 84 area. That could take us back to this level here, and that would be interesting. And this is a very, very nice long-term rising megaphone from the 2008 lows, basically. And this is the obvious next target within that megaphone is this megaphone support in the 96 area. So if we go higher, we could be forming a flag here, bull flag. That would be A, B, C. Go down, hit that trend line and bounce there and head back up to the highs. But if we form a double top, I'd be leaning towards it breaking that and going lower. So we shall see. All right, let's have a look at the monthly chart. We've got no divergence on the monthly chart on US dollar. We've got a weekly RSI 45 sell signal fixed, but arguably that has reached the possible near miss target. There's not an awful lot in terms of sell signals here really to look at. We've got an open RSI 14 sell signal. I think this will play out in due course, but it's not the strongest signal. I wouldn't be astonished to see that break. And if we went up to 114.75, chances are that would fail. All right, TYX, where we have a very, very interesting situation. We've got an RSI 14 sell signal fixed here on the monthly, and I'm bearing that in mind. That's on TYX. We've got another one on TNX as well. But one thing I'm watching here is the potential inverted head and shoulders we've got either forming here or already formed and broken up, which would have a target in the 8 to 9 area. Now, the reason this is interesting is because we're going to have, this is going to be a year of disruption. I've been talking about this quite a lot. I was talking about it again on the post today. Trump is a disruptor. Now, he's going to disrupt a lot of things. Some of those will be good, some of those will be bad, but basically, he's going to be shaking an awful lot of trees. One of those trees that we're going to be coming to, and the question is, how much did he mean of his campaign promises? But if he meant those, then he's planning to extend the current tax cuts, which I have to say, currently the deficit is on course for 2.5 billion this year. And while these tax cuts are only extensions, it wouldn't make the overall fiscal position worse. It certainly wouldn't make it better. He's also promised a number of further tax cuts and at least one entitlement extension. These are significant numbers, and the situation is pretty serious in terms of the amount of the size of the deficit and the amount that the US owes. I'm really wondering whether the bond market will wear it. Now, if it doesn't wear it, because the bond market, you tend to reach a stage where the bond market is just thinking, these guys are not paying any attention to whether or not we will be repaid. The closer that the US slides to insolvency and the more reckless it is, the faster that kind of process goes, then the more the bond market is liable to become unhappy. And it's just a matter of time until it becomes unhappy. When it becomes unhappy, either then interest rates tend to go up sharply. And another thing that could cause that is it does look as though tariffs are going to be imposed. There's a possibility of a trade war in Europe. Certainly, Trump seems to be very negative towards the Europeans at the moment. There is some talk among the administration that the value-added tax on all sales in the European Union is and Britain as well. Actually, is a tariff, and actually it's not a tariff. It's applied to everything equally, regardless of where it came from. So it's really not a tariff. But if they decide to treat it as a tariff, and do retaliatory tariffs, then I think the Europeans would respond, and then we would have a trade war. That's not going to be good for the markets if that happens, and that also would likely boost inflation. Tariffs ultimately are likely to get paid by the American consumer. That is going to cost them money. Now, it is a way of raising taxes, which is one of the only ways of raising taxes that has some possible support. But, of course, that's based on people thinking they won't be the ones paying it, which ultimately I think they would be. But that's liable to put up inflation. Of course, that's liable to put up interest rates. If the government is too reckless and the bond market loses confidence in their willingness to actually pay them back in due course, and their willingness to be prudent enough that they have a decent chance of being paid back in due course, then at that stage, interest rates will rise. Mostly countries with a level of debt that the Americans have pay interest rates of over 6% on their 10-year rates. A lot of them are paying 8 or 10. It's on that basis, this would not be an unreasonable target. Furthermore, look at where that target is. That's at the 50% retracement of the huge bear market in bond yields and the huge bond market in bonds. Bull market in bonds that went from 1982, I think, to 2020. When we made this low in 2020, I was saying that the bull market in bond yields and the bear market in bonds, I would expect historically to last for 10 to 15 years. We're only 5 years in. There's a lot suggesting here that we might see this made, and I think policy at the moment is suggesting that we might see that. I'm thinking we may well have that bond crisis this year, or maybe in the first half of next year, and that might put up interest rates to 8 or 9%. That is interesting. So I'm thinking at the moment the current setup is favoring a retest of 49.97, and when we get that, I think we've got a big inflection point. That could be the second high of a double top, and we could head down. And if we see a fiscally responsible Republican government, then that could well happen. But if we don't, and I think at the moment there's not much sign that we're going to, then actually, yeah, this could head up. That could have big consequences. Looking at the daily chart, we're seeing a pullback here, but ultimately this is a flag. It's broken up with the target in the 49.97 area, and I'm not seeing anything to suggest that won't make target. This is a very nice flag. This looks like a small bull flag forming. This is a large, nice bull flag that broke up already. And it's got a target at 49.97. I'm not seeing anything to suggest it won't make that target. We will see. All right, great. Let's have a look at CL. Okay, CL, we are still kicking around here, but we do have, as I've been talking about in the pre-market posts, we do have a very nice looking nested double top bottom setup here, and we've broken up from the first double bottom. That's got a target in the monthly pivot area, 73.59, but the second double bottom resistance is slightly below that and about the 73.40 area, and if we see a break up from that, that would have a target at about the 76.50 area. That could get us a long way back to this high. Now, there's a lot of, the jury is out on whether the Trump administration is going to be, in the short term over the next year or so, bullish or bearish for oil prices. Drill Baby Drill is suggesting more supply later, but I mean, it takes a while to deliver that. And some of the other things he's doing, like for instance, the tariff on steel, is going to make putting in individual wellheads significantly more expensive. I think an individual wellhead costs like $400,000 or $500,000, and this tariff on the wellheads which need to be made from imported steel because there are no local sources of it adds basically $100,000 to the cost of every wellhead. That is liable to slow down the number of wellheads that goes in. We'll see how this develops, but in terms of the Saudis volunteering and the OPEC volunteering to increase production to take the price below $50, I really don't think this is kind of a turkeys voting for Christmas thing. I just don't see why it's in their interest to do it. And at the moment, they're looking very negative about it, and that's not surprising. It's going to take a while to get more oil supply from the US going, and it does look as though there might be a disruption to the Canadian oil supply, which could cause all sorts of interesting problems if tariffs go on there. I think the lean might well be up. We will see how that goes. All right, NG, we had a nice looking double top here. Sorry, I marked that in on the bigger picture chart, which I'll be looking at. And we had a rising megaphone here, and we've just gone straight up beyond it. We've just headed up at 0.7 and a very natural gas move. I think we may have to get some retracement soon. We've got a possible 60-minute sell signal break, but I'll have a lot more to say about this on the daily chart. So let's go to that. Okay, CL first. No current divergence. We had a sell signal here, which made target. We've got a nice looking double bottom here, and we are trying to break back over the daily middle band. That closed at 72.15 today, and the market closed at 72.10. So we haven't broken above it yet, but if we do, then this double bottom comes into play, and we could see a move back up into the 76.5 area, as I was saying, and possibly I threaten a retest of this high here at 77.86. What does the bigger picture look like? Well, it's not obvious. If we went up to 79.39, would that be potentially a second high of a double top? I'm thinking no. I think they would be oversized for it. We have broken over this declining resistance, but really this isn't a particularly clear setup. We had a triangle that broke down, but failed to make the target there at 63.57, and I think that is no longer a valid target. We will see, but obviously the first thing we need to do is get back over the daily middle band. All right, let's have a look at natural gas, which is really interesting here. Natural gas, I was thinking we'd do another retest of this low, and then we would see this move, but actually we've seen this move now. We are trying to do a sustained break over 3.87. if we do that, then we've got basically a pair of targets here for a double bottom, which are bracketing the 6 area. Again, that would be a 50% retracement of this decline from 10.04 to 154. It's a very attractive technical target. I was thinking we'd do another retest of the low before we did it, but at the moment we are trying to get there. If we can sustain this, convert this area here into the 3.7 area to support, then we may well make that target. I am a bit surprised it's doing it right now because we do tend to have a weak period at the start of the year, but we just haven't done that this year, and we don't do it every year. On the weekly chart, nothing really to say. Weak RSI 5 sell signal reached possible near miss target, but we are trying to break firmly over this. And if we can deliver these kind of numbers, 4.3, 4.5 into the end of the month, that's going to look a lot like a breakup. On the daily chart, we've got a weak RSI 14 sell signal fix that didn't make the possible near miss target, and it looks as though it's about to fail. We did have a nice looking double top here. And that broke down and that fell. So we've got a potential larger double top here, but I think it's now reached a size where I'd be struggling with it in terms of credibility. If we saw a breakdown from this level, I mean, it's not entirely beyond the bounds possibility we could head straight back to 165, but it's larger than I would be comfortable with. Short term, I'm thinking we may well see some retracement. We've got negative divergence on the hourly chart, and the RSI 5 has reached 90. You do see some pretty wild moves on natural gas though, so we will see. All right, let's have a look at GC. GC is still kicking around near the highs. I am wondering about some retracement here. There are some indicators they haven't delivered yet, but I am wondering about it. And I am wondering if this might be while the dollar heads up, which would be a natural time to be retracing on metals. In terms of the SI chart, there's nothing particularly clear, but HG is interesting because we've got this possible head and shoulders forming, and we've got a daily RSI 14 sell signal fix, and we've got a daily RSI 5 sell signal fix, and that's a couple of decent sell signals. I'm thinking we may well do some decent retracement here. I'd like to see a larger right shoulder form here. And I think we might well see that. We've still got a 60-minute buy signal fixed, and that hasn't really delivered what I would expect it to. I'm thinking this may be the second low of a small double bottom, take us up into the current weekly pivot area, 4.68, and that should be a good level to find a right shoulder high. And then we might come down again and start heading to, well, where the current monthly pivot is, but by the time it was reached, it would probably not be the monthly pivot in the 4.24 area. That would be a decent retracement. It would probably certainly make the daily RSI 5 sell signal target, and it might make the RSI 14 as well. After that, I'd probably be leaning towards the upside. I'm thinking in terms of a bullish consolidation here, albeit very possibly a sharp one. Okay, we're not seeing an awful lot on the currencies here to give us direction. I'm mainly watching the DX chart. So let's go straight to KC, where this looks like a bull flag forming, setting up a retest of this high here in the 430 area. I'm leaning towards seeing that soon. SP, we've got a little higher here. We've got an IHS which is broken up here with a target in the 20.35 area, and it's on the way there, I think. We've got a possible 60-minute sell signal brewing. We might see some retracement, but I'm really liking this sugar rally, which is well overdue, and I'm like this target, and I'm not seeing anything currently really to suggest we won't make it. Looking at CC, CC, long bullish consolidation. This has been really boring. I think sooner or later this is probably going to result in a retest of this high here in the 12.150 area. Looking at wheat, we have made pretty much the IHS target here, so I'm leaning towards that being delivered already. I've got a slightly different draw of this on the daily chart I'll show you, but on that we've already made the target. No current divergence on corn. We've got a bit higher, and this was a very, very nice looking and attractive double top here, but as I was mentioning on the SPX chart, that doesn't necessarily mean it's going to deliver anything. So this has gone higher and is now a significantly worse double top setup, or not a double top setup at all. We've got a 60-minute sell signal fixed. We might see a bit more retracement while that tries to reach the possible near miss target. On soy, we've got a breakdown for a double top here. That's got a target in the 983 to 987.5 area. That could make target. This could just be a bear flag setting up the next leg down, but it could be a bear flag setting up, let's say, a retest this low and then a reversal back up to the highs. Still keeping an open mind, I'm expecting to either go to this target area here, or the retest for highs. That is what we would normally see at this stage. CT, we've got a very nice looking bear flag here. I was noting at these on last Sunday, I think, that this is a perfect channel. It's a very nice bear flag setup, and at the moment we're heading back to bear flag support. If that breaks down, I'd be looking for a retest of this low here, and that could well be the second low of a double bottom for a very, very overdue bounce on cotton. Lumber, still keeping an open mind. No clear pattern set up here. We have got a 60-minute sell signal fixed. So far, that's not delivered a great deal. Live cattle, we had a flag set up. It broke up. We then had a larger, nicer bull flag set up, and that's breaking up too. I'm liking the upside here. And if this is a flag breaking up, and if this is the last formation of that flag, because flags evolve, then I'd be looking for a retest of this high here in the 208 area. Looking at lean hogs, sharp retracement today, no current divergence, coming back for a test in the monthly pivot. Not seeing anything on the bigger picture really suggesting that goes lower. But if we did go significantly lower, then I'd be looking for a retest of this low here at 86.25. Okay, let's have a look at that on the bigger picture charts and on KC. No current divergence, but we can set up some very nice negative divergence if we see a retest of this high, which the current setup is suggesting we will see soon. Sugar. We had a buy signal here. That's now made target. Very nice looking inverted tip shoulder target here. This is pretty peachy actually. I'm not seeing anything to suggest we won't make that target. I would say we might need a bit of a retracement. I mean, we're at nosebleed levels on the daily RSI 5, but not really, obviously, on the RSI 14. Wouldn't be surprised to see some retracement leaning towards it making the target here, which is here in about the 20.3 area. On CC, I think this is a long bullish consolidation. It might be a triangle, might not be a triangle, but I think it is a long bullish consolidation. Sooner or later, this likely results in a retest of this high here at 12.193. Looking at wheat, we had an RSI 14 buy signal. That's now pretty much ready to target. We've got an IHS here. I've drawn this a little differently here, but I think this is a better draw. This is the one I'm watching here, and this has now made target. I had the target for that in about the 606 area. We've made it up to 609, so I think I'm calling that. What I would say is this may well continue. If we see a bit of a retracement here and then we continue higher, then I've got a much, much larger double bottom here with resistance at 639 and a minimum target on a break up from that in about the 735 area. That could be interesting, and that could get us within striking distance of a retest of these highs. I like it. Don't know if it's going to happen, but we will see. Looking at corn, we're still on. This is the reason I've got these arrows here is because sometimes I've noted on my posts that sometimes the flag that breaks the other way is the reversal pattern, and I think that may well be the case here. So I've drawn in the targets accordingly, and this would have a target in about the 517 area. I'm not seeing anything currently to suggest it isn't going to make that target. We've got, apart from the sell signals, we've got an RSI 14 sell signal fixed, we've got an RSI 5 sell signal fixed, and neither of those has made target yet. But at the moment, it seems a little reluctant to do so. We're holding support, and it may be that we could head up and make this target in the 517 area before that makes target. We will see how that goes. The other thing to consider is if we're getting into this area and we see a significant pullback, that could make those target and forming an inverted head and shoulder pattern, and quite a nice one with an ideal right shoulder low in the 459 area. So keeping options open there. But that, if we were to make that right shoulder target, then that could fit, of course, with soy making this double top target, which is trying to break down from at the moment. No current divergence there. We will see. On cotton, we had a weak RSI 5 sell signal fixed, and we've got an RSI 14 buy signal fixed. That sell signal, I'm leaning towards that sell signal. Ideally, that would play out into a retest of this low here in the 66.25 area, and then it would break up. And that would be a very nice looking double bottom. I would love to see that, and I think we may well see that. And if we do, we could start a really serious move to the upside on cotton, which has been absolutely beaten to death over the course of the last year. I would love to see that happen, and that's a very promising looking setup. We will see. All right, great. In that case, I think that's a wrap, guys. I will have this posted ASAP, and I'll catch you guys again on Sunday. Everyone take care. Oh, just one last thing. Bearish leaning days, Thursday and Friday this week, Monday next week, Friday next week. The Monday and Friday next week are quite strongly bearish days, and for the last few years, at least, the last week of February has been all bear. So we will see how that develops this year. All right, catch you Sunday.